This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's check in on what happened on global markets overnight. Fairly mixed, with European stocks slipping to two-week lows, while on Wall Street, the Nasdaq and S&P experiencing a late sell-off as investors digested comments from Fed Chair Jerome Powell and President Trump, who again criticised China. The Dow, though, finished positively as the major banks kicked off earnings season. Wells Fargo shares surged, registering their best trading day in 6 months, and Citigroup also jumped after both lenders beat estimates for third quarter profit. JP Morgan Chase raised its full year forecast for net interest income, and Goldman Sachs beat the street expectations for quarterly profit. However, both shares fell. BlackRock's assets under management hit a record $13.5 trillion, lifting its shares. The shares of Advanced Micro Devices rose after providing detail on the deal to provide AI chips to OpenAI. The shares of retail giant Walmart rose after revealing it's partnering OpenAI to enable customers to shop directly through ChatGPT's instant checkout feature. Then Johnson & Johnson shares rose, but then actually finished marginally negative after raising its 2025 guidance and lifting its sales forecast. Well, the US labour market remained in the doldrums in September, though the economy overall may be on a somewhat firmer trajectory than expected. That's the assessment of Fed Chair Jerome Powell, who said while official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue their downward trajectories. Well, the Fed will receive an update on consumer price inflation prior to the Fed's next policy meeting at the end of the month. Meanwhile, President Trump says he's considering terminating some trade ties with China, particularly in relation to cooking oil. As trade uncertainty between the two largest economies remains, both the US and China have begun charging port fees on ocean shipping firms that move exports. Well, short-dated US Treasury yields have edged lower on expectations of those Fed rate cuts. The 2-year at around 3.48%, the 10-year close to 4%. The US dollar was down slightly on the day. Checking in on the Aussie, it is now below 65 US cents. Well, oil prices have fallen as the International Energy Agency warned of a huge supply glut next year, and as trade tensions persisted between the US and China. Brent crude futures 1.5% lower at $62 a barrel. Copper that tumbled 2.5%. Iron ore more than 2% lower at $106 a tonne, and gold has continued to climb to record heights, lifted by expectations of US rate cuts later this month and on investor and central bank buying. Spot gold at around $4,140 an ounce. And Bitcoin has fallen back to below 113,000 US dollars. All right, let's get across what we're seeing on Wall Street at the moment. Howard Silverblade joining us from S&P Dow Jones Indices. Howard, welcome back. Good to see you. So, as I mentioned, a bit of a mixed session there as investors, the markets weighing up what they heard from Jerome Powell in relation to what the Fed's likely to do at its next meeting. And also, of course, those comments from Donald Trump in relation to China trade. How did you see that play out on the market?
Well, it opened up pretty poorly this morning. We had decent earnings mostly across the board on there, beats for the banks. But the market was down. It was a day of battles between bulls and bears. There was some profit taking early on, but it shored up as the day went by. As you said, there were two major items on there. One was the China situation, which Trump and China have been battling back since last Friday when we saw that big decline, and Monday's a rebound, and today kind of another decline down. But both of them are talking about what they may do. Nobody's implementing anything yet. So there's a lot of talk, a lot of saber rattling. So we're back in that tariff situation. But it has not happened yet, and the feeling is that there'll be difficulties. Maybe things will tick up or down and move around, especially with the U.S. farming and the soybean situation. But it will settle. As far as Mr. Powell goes, the street's got it pegged in, and he confirmed it that we're going to get that quarter of a point. Didn't comment so much farther afterwards on the December, which the street definitely has in for another quarter of a point there. He did comment on the employment situation. We're not getting any reports now because the U.S. government is officially closed because we ran out of our budgetary authorization as of September 30th. So the U.S. and a lot of parts are closed. So we're not getting that data, but there's some private data that continues to indicate that hiring is slow coming. There's still a lot of job openings there, but people aren't leaving as much. So there's concern on the unemployment more than on the inflationary. So that's what the street is looking at more, that Powell will eventually come back for the December cut. Again, the October 29th one is somewhat pegged in there, but the December one is still open, even though the street's betting on it. The Fed hasn't commented too much for a commitment there. But by the time we get another month or two, and this shutdown in the U.S. looks like it could go on for a couple more weeks. I mean, it could be the end of the month. There was a couple sides are not talking that much. A couple of very big negatives, such as the U.S. military not getting paid. Trump found a way around that, so that takes one of the tension items out of there. So both sides aren't running back to the table yet. So that's a concern right now, the economic shutdown. If it continues on, it will have an impact on GDP.
Now, Howard, more immediately, third quarter earnings getting underway, of course, with the big banks. So what did you make of those results that you saw?
Again, the results were mostly good. Some of the banks, as you showed, did not go up on it. Obviously, Wells Fargo's did good, but the J.P. Morgan and stuff, and Goldman Sachs, which had a very big part of investment banking, IPO and investment banking, is making the quarter for these banks. I mean, that was good money coming in, and the actual fourth quarter is expected to continue on, especially for the M&A. So the bank earnings were good. They may have been fully priced. In the commentaries from the bank executives, they kind of indicated that they were somewhat fully priced. The chart that you're showing, I think one of the big takeaways, and again, we've only had about 31 companies so far, is that 26 of the 30 companies beat on sales. That is very unusual. Usually 50, 55%, 60 is considered very good. So right now the opening is that 87% have beat on sales. Last quarter, second quarter, everyone expected the sales to be down. They ended up to be up, and we hit a record. This quarter coming in, sales weren't expected to be that great, but this one, starting 26 out of 30 are beating. Again, not necessarily an indicator on here yet, but we'll know in another week or two. But sales are definitely something to look at, because those sales, a lot of it is coming right down to the bottom line and pushing those earnings up. That and the fact that companies are paying a lot less in tax now. That one big beautiful bill put $190 billion in corporate pockets from deductions and write-offs for depreciation, as well as research and development, especially the healthcare research and development. That money, that $190 billion, is being saved by companies, and it's coming down to the bottom line. So earnings are expected to do very well. We still have a high PE, but earnings going up helps support the market.
Now, meanwhile, Howard, those AI deals continuing. We got obviously the AMD with its providing chips to OpenAI, and then of course we just had news on Walmart now striking that deal with OpenAI to use ChatGPT. It's just there's news flow every day in the AI space. Hence, we have seen the market continue to rise. In fact, I think I was looking at a Bank of America fund manager survey, increasing number, perhaps pointing to that this could be a bubble.
Definitely, because we're mostly focusing on the manufacturers and the chips themselves, and the actual the AMDs, the NVIDIAs on there that are producing. But the AI product, just as you said, like on Walmart, it's moving out. I see it every day in the financials and the insurance companies that are using it every single day. Industries are starting to adhere and use some of these things. It's not artificial intelligence in that they're thinking, but they're increasing their productivity and increasing their margins through better efficiencies, because the systems could now connect more dots, could now calculate more things that people had to do on there, and that's going into industry. So this Walmart is very important in that it's the first into the retail of a traditional brick and mortar company, okay? And they've done a lot to go on the web, but here it's showing that it's moving out and where some of the profits are going to be. As far as a bubble on the upper side, in other words, the producers, they are fully priced, and at some point when this slows down, something's going to have to give, and that's going to be on price. But the production and the efficiencies are definitely all coming into the market, and those are going to be the stocks you want to own if you've missed the other ones, or if you're getting out of the other ones, what's the next one?
Indeed. And Howard, can't let you go without a comment on gold. Speaking of bubbles, are we in one at the moment? It's record after record every day.
Yeah, 41.80 today. Another new high, and silver also hit back where the Hunt brothers were, $50 on there. One of the takeaways, besides banks and the amounts of use, commercial use is down, but obviously investment use is a lot more. It is now more of an acceptable part of your portfolio, and not the 2 to 3%, but even higher percentages, as it is with younger people. So more people are investing, so you're getting a lot more demand on this side, and it looks like it's going to continue to increase, regardless of what gold should be or what kind of a hedge it is. If you get more buying and more going into it, more flows flowing in, it pushes it up. And from the street side, you see inflows coming in, you want to buy. You may get out quickly, but you're getting in there, and the inflows are coming because more people, and not just institutions, are buying gold as a part of their portfolio. And a lot of them had none of it. Even pension funds, I see some of them going in, and they've got monthly payments they've got to make. And I see them buying a piece of gold too.
Howard, thanks so much for joining us from S&P Dow Jones Indices.
Have a good day.
Let's take a look at where we're likely to open, looking for a positive start. In fact, we are up more than 0.8% according to SPI Futures, and of course we're going to get right across that in just a minute or two when we get underway on the local market. Stay with us for that.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.